Was as high as 50% at one point last year when there was great uncertainty around all of the turmoil in crypto generally. And now it's single digit. And there are now other products out there that we can use to gain exposure to Bitcoin in this moment.
Hey guys, welcome back to Everyday Finance. In this video, Cathie would discuss about Bitcoin. According to Cathie Wood believed that the increased likelihood is due to the SEC's strong, engaged in contrast to earlier circumstances. It used to be only a matter of refusing permission. Repeatedly, we simply kept submitting our filings. You know, try. You realize how excellent and resolute we find ourselves in this situation. We believe we are at the front of the line, and for that reason, this January 10th deadline. However, we like the notion that the SEC been so absorbed, and it affects others in addition to us. As well, we believe it is possible to authorize multiple funds at once. Furthermore, they have begun posing follow-up queries in addition to the initial set again. That's a very positive indication. And lots of things Cathie would discuss, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
We're as optimistic about Bitcoin as we ever have been, but there are a few regulatory and tax uncertainties, and we had been waiting for the discount between GBTC and NAV to narrow. It was as high as 50% at one point last year when there was great uncertainty around all of the turmoil in crypto generally, and now it's single digit. And there are now other products out there that we can use to gain exposure to Bitcoin in this moment, and it's just a moment of uncertainty between now, we think, and January 8th to 10th, somewhere in that range perhaps, but we, out of an abundance of caution, didn't want to take any risk. Sure. A couple of things. First of all, BITO, the ProShares, is already approved. There's no regulatory uncertainty having to do with it. So we chose to maintain our exposure through BITO for the time being. And as I mentioned before, there are some tax and regulatory uncertainties still as part of this process. We don't know exactly who's going to be approved and whether they've met all the criteria that the SEC has put before us. We know we have, but we don't know if others, including GBTC, have. We just don't know. So again, out of an abundance of caution, and GBT's discount, again, it was as much as 50% relative to NAV. So not only have we enjoyed this year the run in Bitcoin itself, but we've had the nice closing of that discount. So it's been, double good news for us. Well, we think the probabilities have gone up because the SEC has been highly engaged compared to what was happening before. Before, it was just denying approval. And we just kept putting our filing in again, try,
Yeah.
dogged and determined. And so here we are. We think we're first in line, and that's why there is this January 10th deadline. But we like the idea that the SEC has been so engaged, and it's not just with us, it's others as well. We think a number of funds could be approved at the same time. And they've been asking not only one set of questions, but follow-up questions. And again, that's a very good sign.
Well, speaking of engagement, go ahead, please. No,
Yeah,
finish.
the last few questions have been very technical, and so more de rigueur, and you'd expect them to be asking these questions as we head toward an approval. Now, it's not 100% certain, and so we want to make that clear as well. This is the SEC, and we never know, what might happen along the way.
According to Cathie Wood, our asset retention in 21 and 22 pleased us much. Cathie Wood had net inflows. In actuality, one may anticipate that individuals that average down into the extremely steep declines that we were witnessing in 22 especially might make some money if you combine the 2 years of more than $8 billion with this year. Cathie have therefore experienced outflows of around $500 million for our flagship strategy, and maybe as much as $1.8 million for all of Cathie Wood's strategies. About 10% of the influx we experienced in 21 and 22. Thus, once more, Cathie would like to express our gratitude and satisfaction to our clients for their ongoing support. Let's back to the Cathie Wood interview.
Well, we are very happy that a couple of things have happened. That this idea that interest rates were going to continue moving higher has been proven incorrect. And I think even the Fed, while there is that small possibility, even the Fed is now starting to talk about the other side of the interest rate move. And so I do believe all we've seen so far is a reaction to that macro phenomenon or judgment call. We went through our flagship strategy, and all of our strategies went through a very difficult time from February 21 through December of 22, as interest rates, first of all, were presumed to move up or forecasted to move up. And then when they did move up, so it was almost like a double discounting. And so we've seen the first installment of the correction there to the upside for our funds with this notion, and it's again the forecast that interest rates will come down. And we would presume that if they do come down, for the reasons we think they're going to come down, the most important one being deflation, then our funds will be in good shape, because we are our companies thrive on deflation. Technologically enabled innovation is deflationary. Well, we put up a chart in one of our In the Nose, which is a YouTube video that I do every month, Employment Friday. And in that chart, you will find a ratio. It's the metals to gold ratio. So metals price to gold price. And there has been an extremely tight correlation between that ratio and long-term interest rates. In October, we published it, or early November. And what you will see is that there was a very wide gap that had developed. The metals to gold ratio was near its low for the past 12, 15 years. And interest rates were at their highs, 5%. The correlation, if you just eyeballed that chart, the correlation suggested that rates should go to 2%. Now, maybe they won't go all the way to 2%, but we think that long-term interest rates are way above where they're going to end up because of deflation. Yes, well, we were very gratified at our asset retention in 21 and 22. In fact, we had net inflows, if you combine both years, of more than $18 billion. And this year, one might expect that those who average down into the very steep declines that we were seeing in 22 especially, might take some profit. So we have had, I know for our flagship strategy, it's roughly $500 million in outflows. Maybe for all of our strategies, $1.8 million. So maybe 10% of the inflows that we enjoyed during 21 and 22. So again, we're very gratified and grateful to our clients for the support that we continue to receive.
So has the outflow stopped?
We have had days of, on balance, very recently, yes. And I think part of this is many people do tax management toward the end of the year. And so some of the outflows might have been associated with clients who got in at a high cost base and were just harvesting some tax losses. But I think we're through that.
Do you find it a little surprising, though, Cathie, considering the run-up? Or I'm curious about the conversations you do have with investors, considering the year that you're having, and then to see those flows. It's got to be a little disheartening. Yeah.
Oh, no, not at all. Actually, we put out a piece for Resolute, our distributor, who, and we basically showed to them, if you rebalance our strategy when there have been big moves one way or the other, if you rebalance regularly or based on a rule like when the fund's up 15% relative to everything else, take some profits. And what it showed, that study showed that if you are disciplined that way, that over any rolling 5-year period, it is highly likely, almost 100%. I'm not quite sure if it's quite that high, but that you will beat the market, meaning as measured by the Nasdaq or the S&P, over a rolling 5-year period. And so, a lot of our funds are with advisors who are very sophisticated and responded somewhat, perhaps in this tax management part of the year, to that message.
Regarding Bitcoin, Cathie Wood said, "We remain as optimistic as ever. However, there were certain tax and regulatory uncertainties, and we had been anticipating the narrowing of the difference between BTC and NAV2. When there was a lot of uncertainty last year, it reached as high as 50% due to the recent upheaval in the cryptocurrency space. It is currently single digit, and there are no other items available that we can utilize to increase our visibility for right now." Bitcoin. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.